All right, good morning. Good morning. It is Tuesday, September 10th, 2024, approximately 11:22 a.m. Eastern Standard Time. Okay, all right. So today I wanted to get into I wanted to really dig into entries. It's all about the entry process, right? I watch a lot of videos. I do a lot of research on different things. When I see stuff, um, you know, uh that's brought to my attention, or what have you. And it seems to me one of the things that I've come to realize is that a lot of people struggle with entries, for a lot of different reasons, right? We all struggle with entries, right? Entries being, probably one of the top three most important aspects of trading. In my opinion, and these are all just my opinion, right? In my opinion, psychology is the number one the number one thing to trading, that we need to be aware of and cognizant of and really, really work on, constantly. Like we need to constantly be working on our trading psychology. It can have probably the biggest impact on our success, or what have you. And then part of that trading psychology comes with having a really, really good understanding about how all of this works and a good understanding and good trading process, and then confidence, right? All of that plays a factor in our trading psychology, or what have you. So with that said, let's see if we can build. I'm gonna show you. I'm not telling you what to do. I'm only showing you what I've seen work for me from time to time, right? And I'll give a bit more of a spill on, the psychology and, trading and stuff like that after I show you a couple of techniques for entries. Remember, today's focus is about the entry. All right, with that being said, let's take a look. All right, so this first chart obviously is UJ, hourly chart. Of course, this is my technical analysis chart here. As we can see, we have my money flow profile. And then we have our support and resistance areas along with the liquidity. And then this indicator right here is the red K EverX. All right, so one of the things so there's different ways to do entries, right? Because I gave a aspect or a way to do entries in a video or two back, right? This is just another way to do it if the other way doesn't work for you. Because here's the deal. So like every trading strategy, right, doesn't work all the time, right? Because it depends on a lot of different things. It depends on the market conditions. It depends on timing. It depends on your trading psychology and everything. So for me, what I do, so the very first thing that I like to do when building a entry or a setup, right? I like to call it a setup, right? What setup am I looking for? So the first thing I like to do is to identify the current market direction, right? And that's a daily thing, right? We get the market direction based off of the daily, right? So first thing I'll do is look at the daily, and you can look at the weekly as well to get a weekly perspective. But because I'm a day trader, I like to get the daily perspective. So first thing we do is I say, okay, today the market is bearish, right? So I want to look for bearish opportunities. So what I want in this particular process, one of the things I want to point out to you, we're going to talk heavily about momentum, right? The oscillators and the part that they can play in your entry process. Like I said, there's a couple different ways to do entries. This is just another one. This particular process I found to be one of the safer processes and maybe more consistent processes for your entries, right? Using momentum. And the reason being is because momentum will give you a great indication of the direction of the next candle, right? The current candle, the next candle. And the higher time frame you're looking at momentum on, the more reliable that becomes, right? So the other thing that I did was, because I'm not just giving this to you all from, this is just what I think. So in doing a little bit of research, right? I was doing some research on momentum, volume, things like that, and how they relate to entries and stuff, right? How how we utilize them in entries. And one of the things that I found was that momentum oscillators like the RSI, MACD, stochastic, all of that stuff, right? Those indicators are more geared towards reversals when you're trying to find reversals, pullbacks, and things of that sort, right? Basically directional momentum, right? Now, the part that volume plays though, see, volume doesn't necessarily give you is as reliable for entries, reversals, pullbacks, and stuff like that as momentum is. So volume is more suited towards the strength of a move. So when we're in the move, right? So we can combine volume with our entry, right? That's probably the best way to do it, right? To combine volume with our entry because with our entry with momentum. So combine volume and momentum with our entry process. So if we have both in our favor when we go to do an entry, then that makes our entry that much more stronger, right? So again, the understanding now is that momentum is what's going to drive the directional entry, right? Meaning if I want to go bullish, I need to make sure that momentum, right, is bullish, right, on the time frame. Right now, we're looking at the daily. We're going to break this down, right? I want to make sure momentum is bullish. Right now, what I'm seeing using this indicator here, momentum is bearish for the day, right? And see, and I think I pointed this out before, the more space you have between the signal line, right, and the smoothing line, right, the stronger that particular trend. So if the white line is below the smoothing line, right, the slow moving average, right, if the white line is below it, that is an indication we are in a bearish trend, right? Sales, we're looking for sales, right? When it goes above it, right, now we're looking for buys. The momentum now has shifted. Now, by definition, momentum, right? RSI, MACD, and all of that stuff, right, is defined, right, in financial markets as, right, the speed at which price is transacting. That's what momentum is. It's the speed at which price is transacting, right? That's why they're considered momentum oscillators because price is oscillating based off of how fast buying and selling is occurring, right? So if there's a lot of buying happening, right, then the momentum is to the buy side, and your oscillators are going to indicate that. They're going to indicate that buying, there's a lot of buying momentum right now within this time frame, right? Or there's a lot of selling momentum right now within this time frame, right? You have to understand what's going on. So if, regardless of what price is doing, because we know price can be manipulated, for whatever reason, we'll just call it manipulation, because it's not always necessarily manipulation. But for those of you that stuck on the term manipulation, we'll say price can be manipulated, right? Up and down, right? But momentum cannot. Because what you'll find sometimes, and that's why divergence exists. Divergence between momentum, your oscillators, and price exist because of that manipulation. Because price can be going one way and momentum can be going another. Or price can be going one way and momentum can be going nowhere. Why? Because price is moving not based off of the speed of transactions, right? Right? It's moving based off of something else, right? So, but when you add momentum into the equation and you have momentum, moving price, right? Momentum is a part of moving price along with volume. Now we have an A plus trade. Now we have a confident trade setup, right? So that's what we're looking for. So again, one of the first things I do is I'm looking for the directional bias for the day. So today's directional bias is going to be bearish, right? So we're looking for sales, right? So we're looking for sales opportunities. And then I look at the momentum, right? And I see that the white line is below the smoothing line. Great, right? Momentum is here. Now, one thing I will point out, I'm now cognizant though, that momentum and the moving average are touching, right? They're close, right? That indicates that momentum, the downside momentum that we had, right, is slowing down, right? That means it's starting to slow down, right? And that probably started yesterday in yesterday's trading, where yesterday was mostly a bullish day, right? So this now is indicating that there may be a slowing in momentum with this down movement. Got it. I'm well aware of that, right? So now I'm looking for sales for today because I know my daily bias, right, is bearish, but I'm also now aware that it can turn bullish today at any time, right? But I'm still looking for the sales, right, for right now, because right now momentum is still bearish, right, along with price action for today. Then that's again where our other indicator, our time frame continuity, comes in, telling us that the market is bearish on all time frames, right? So a good time to be a bearish trader or selling, right? The other thing that I'm going to point out to you with this indicator here, so if it's touching or if it's close or something like that, right, you can look over here, right? This white rectangle and this orange yellow rectangle right here are indicative of these lines right here, right? All right, your smoothing line and your signal line. So if the signal line is below the smoothing line, that means we're bearish, right? That means momentum is bearish. If it's above, that means momentum is bullish. Okay. Just wanted to point that out in case it's a little close and you can't really tell, if it's bullish or bearish. And so as you can see, though, they're pretty close together, right? Which means there can be a change in momentum at any time. At any time. All right, cool. Hopefully you understand that part so far. And we're going to get back. We're going to get down into it, right? All right. So now I'm going down to my technical analysis time frame, and I'm looking for, where am I going to look to take these sell opportunities, right? Where am I going to look to take these sell opportunities? Well, we have a thing called order blocks, right? We have order blocks and we have high volume areas, right? As you can see, this high volume area here coincides kind of with this order block right here. So knowing that momentum, right, is to the downside. All right, so we know that on the daily, right, we have bearish momentum, right? We want to have bearish momentum when we look to put our trade in, right? We want to have bearish momentum on all time frames that we're looking at. So again, we're looking at volume and we're looking at momentum, right, on all time frames. So this is my technical analysis time frame. So the hourly, right, is telling me right here, right, in this area. So price is telling me that from a time frame continuity standpoint, right, this bullish move right here has died out for the moment, right? And I have no continuity at the moment, right? But so what I do know though is that on the daily time frame, right? This is 4 a.m., right? Just using this for illustration purposes. I know that on the daily time frame, that momentum is bearish, right? And that the daily candle seems to be bearish as well. We can look at the time frame continuity to verify that, right? So there's a good chance that when I get into this area, whether you have an order block here or not, right, we can see that time frame continuity kind of stops and we go neutral, right? So now I'm starting to look at the possibility of sales, right? Sorry, this is what price is doing. So now let me see what momentum is doing. Okay, momentum, typically what you're going to see is that momentum may be close, right? We may be pointing down or something like that. We know that it's not up, and you can also see divergence, right? We see that we had upward mobility here in price, but here, right, on momentum, we have downward mobility, right? So the momentum has shifted to the downside as price has shifted to the upside, right? Again, that manipulation that we were talking about, right? So this is telling us that this up move, right, has started to lose momentum. The rate of transactions, right, of buy transactions has started to slow down, right? And, this is an opportunity to where sell transactions may very well pick up, right? Pick up some momentum and we get a shift to the downside. That's how that looks, right? So we're using all of this in conjunction to create a dynamic, a dynamite trading entry, right? The process, right? So we're on the 1 hour. All right, we're seeing that I have I have a possible shift in time frame continuity, and then momentum, is looking like it may go in my favor, right? it may go in my favor. Again, looking at the higher time frame, we already know that on the daily, the momentum is bearish. It's bearish, right? So there's a good likelihood that we're going to go ahead and turn bearish on the hourly as well. So the next step in our journey, right, is going to be to go down to the lower time frame and see what we look like on the lower time frame. Again, we want to make sure everything adds up before we do our entry. Okay. All right. Here's the 5 minute. We're going to take a look and see what that looks like on the 5 minute, right? Okay. We were 4 hour. All right, up here. This is where we were, right? So 4:30. So around the 4:30 candle or what have you. All right, so let's take a look. Okay. We see now, here's the deal. Here's the deal. So the 5 minute can be a bit fickle. And when I say a bit fickle, I mean that it's going to oscillate. It's going to give false signals and everything because there's so much going on. Price is moving quicker on the 5 minute than it is on the higher time frames. That's why we're guided by the higher time frames, right? We're only using the 5 minute for, to get closer entries, right? To get closer entries, to set, tighter stop losses and stuff like that, if that's what you want to do, right? I would recommend, setting your stop losses and stuff on the higher time frame, on the hourly time frame to give you some room to work with, right? But as we can see, right, because here's the deal, right here at 405, right? Let's see, where's that 405 candle? That 405 candle is right here, right? You would have got in this move on this 405 candle, based off of what I just said, right? Based off of what I just said. Okay. But again, that's not the move. We're doing it based off of the hour, again, based off the hourly. So when we start to get that, shift based off the hourly. Again, we know that the daily is in conjunction, right? And then, based off the hourly, we start to get that shift. Again, I prefer that the momentum on the hourly has already crossed, into bearish territory. That's my preference right there, right? For then me to start going down to the lower time frame. It's probably safer to do that. Now, as we can see, right, we saw that around the 4 o'clock candle on the hourly that, we were starting to lose momentum and everything, right? So we dropped down or what have you. So let's see if you had put an order in on this 405 candle, what would your drawdown have been? So let's say we put this order in, this 405 candle, right? Drawdown, right? Drawdown would have been about 15, 16 pips, right? All right. Again, why we want to put out, use the hourly time frame for our stop losses. Because if you had, probably if you had seen this and you did that, you would have put your stop loss right there, right? 13 pip stop loss and you would have been stopped out. During the next shift up. That's why it's so important to understand, the best way to do these entries. And that's why I'm covering this today. Because again, we get tripped up on our entries and we think that a process doesn't work. But again, it's just about timing sometimes, or what have you, in market conditions and all of that good stuff, right? And as you can see on the hourly, we didn't really have the only thing we had to go by as far as a key area, because that's the other thing you want to look at, a key area. You want a point of interest, right? Something that's already established, whether it's a fair value gap or an order block. See, this order block wasn't established at 4 o'clock. It got established after 4 o'clock, right? So we see that, this 4 o'clock candle. So again, you can wait for this 4 o'clock candle to form, right? And you get your cross and everything, right? And then look to enter the market. That's probably your best bet. Let this 4 o'clock candle play out, right? See what you're working with first. That would be my advice, right? See what you're working with first. Let this 4 o'clock candle play out. Because again, this may not close. This may not close gray, right? It can, if you're looking to drop down to the 5 minute, as soon as you see a gray candle on the 4 o'clock candle, then that you're going to get what we just saw on the 5 minute, right? So wait until this 4 o'clock candle close. Make sure it closes neutral, right? Now, that lends, right, verification to what we're looking for, right? So once this 4 o'clock candle would have closed, now let's drop down, because now I know, right, that, and we're looking at, we want to go based off of what we know. Here's what I know. I know that momentum has started to slow, right? I know that time frame continuity has started to change, right? We're no longer bullish according to those two things, right? Or whatnot, but price still made a higher high, right? A higher candle. It broke the high of the previous candle. So we had a 2 up, right? We're not in a 2 down situation just yet. Okay. So now once this 4 o'clock candle closed, which means we got to wait till the 5 o'clock candle, right? Now we go down and drop down to the 5 a.m. if that's what you want to use, if you want to utilize this for your entries, right? And we see where we want to get into the market, right? So now using the 5 a.m. candle, because the 4 a.m. candle then played out, and then boom, here's what we get. Here's what we get here, right? In the 4 o'clock candle, in the 5 o'clock candle, I'm sorry. So we have a fair value gap on this 5 minute. We let price come back, hit this fair value gap. Then you can possibly look for your entries. Now, right? Now that the 5 o'clock candle has started and the 4 o'clock candle has played out, we see, right? Look at this. Check this out, right? We see that price, right? So 440, 445, 50, 55, 5 o'clock, right? We see that for all of those candles, price was under, right? The smoothing line, right? The signal line was under. We got the cross right around 430, right? Because that was another cross, because we got another cross back around 4 o'clock, right? But we didn't want to get in there. We didn't want to get in on there just yet, right? So we let that play out a little bit, and then we got the cross at 430, and after 5 o'clock, we looked to get into this market. So now I feel more comfortable getting into this market, right? After, price mitigated this fair value gap a little bit, fill some of those orders in there, and this is on the 5 minute, right? Now we can look to get in, right? We can look at opportunities, opportunity to get in, whether it be, this candle, one of these candles, or right at the 5 o'clock candle, because we see that it broke, it broke out of this little consolidation right here. So we got in on this 5 o'clock candle, right? It's only 5 minutes, right? So you get on this 5 o'clock candle, we got a three down, right? We get in there. Let's see what the drawdown would have been. All right, so we get in right there, right? We would have got less than a 5 pip drawdown, but let's see what the reward would have been. Now, I want to do you can do one or two things. My recommendation is you do it based off of the 1 hour, but if you were to do it off the 5 minutes, so let's say my entry is here, right? After the 5 o'clock candle closes, right? I can look to take this move to about here, right? Because now this is established. This is the high volume node. This is the highest traded price point, for today so far, for today's session. So you're looking at approximately about a 30 pip move, if you did it that way, right? If you did it that way on the 5 minute. Now, if you did that on the hourly, so once you got in, right? Once you got in and you did that on the hourly though, let me show you what you can do here. Let me show you what you can do here, because here's the deal. The high volume node is right here. So we're moving away from volume, from high volume, right? So this is that 5 o'clock candle. We getting in there somewhere, right? Like right around 505, right? So we're going to play that. We're going to play that like right around here. Let's say right about here, right? So we get in right there. Now what I'm looking to do is I'm looking to take this to the support level. I want to take it to the 1 hour support now, because again, right, my whole point being now, so now you got a 66 pip move versus a 30 something pip move. You're doing it on the hourly time frame versus the 5 minute. You see what I'm saying? Now we get down here to this 1 hour support area, right? And price gets here, we get 66 so pips. Now, what gives me the idea that I can take this trade this far down? Well, one, right, we check that momentum on the daily, right, is bearish, right? So that's one. Two, I have time frame continuity. After the 5 o'clock candle, 6 o'clock candle, I got full time frame continuity. That lends to the move, strength to the move, right? We got volume. And then on the 1 hour, we also have momentum, right? I'm not looking to get out of this trade, right? One, I got my take profit right here, right? But if you want to check and see, right, if momentum is weakening, right? If there's a possible shift before price gets to your take profit, right? If you're a little nervous, right? Look at momentum. Look and see what the oscillator is doing, right? The oscillator, not these right here. Look and see what the oscillator is doing. Has it crossed yet? Is it getting close? I can tell you right now that the oscillator, right? Momentum didn't get close until 6 a.m. So let's look where the 6 a.m. candle is, right? So at the very least, you would came close to hitting your TP, right? Or you would have hit your TP at 6 a.m. before the oscillator even came close. So closing your trade before it got to your TP, nah, it wasn't necessary. It wasn't necessary, right? Don't start getting nervous until the momentum starts to get close, right? And this is on the hourly. Don't track this on the 5-minute. You're gonna mess yourself up. The 5-minute isn't good for your mental, I promise you, right? Right. So I'm staying in this trade because price can do these little swings in between, but they didn't do anything. They didn't make any new highs. They didn't break any high candles or nothing like that, right? They was just swings. But a lot of times this is enough to start making people nervous, right? I got to get out. I'm in profit. Let me get out. I'm gonna take 10 pips. I'm good with that. Are you though? Are you really good with that? Are you really good with 10 pips? Right? Because then you're gonna look at it and you're like, man, I coulda, right? Well, yeah, you absolutely could have if you knew, that momentum was still on your side. Again, at the very least, that 6 o'clock candle would have gave me, quite a few pips. I would have got at least 60 something pips, right? And I may not have got 66 if you closed out, right when, price, did this right here, got close to that smoothing line. Okay, I get it. I can get with that. I can get with that. But then, look at this. Look at what happened. Price never crossed back up, right? Again, if it's close, just look over here to see if that white line crossed over, crossed over that orange line, right? If it didn't cross over that orange line, that means momentum is still in your favor for this trade. And look how long you could have held it, even more than that 66 pips. That's all I'm saying. That's all I'm saying, right? Again, this is just another process that you can utilize and put in your back pocket to be successful to get your entries, right? I'll do another video later to talk a little bit more about strategies and, processes and things like that. Because I think there's some things that people need to understand, about this whole trading thing. Like, look, you can't take somebody else's strategy and just use that. Think you're going to just use that because here's the deal, right? There's millions of traders, right? And I promise you that every single trader is a different trader, is a different type of trader. No two traders trade the exact same, right? So it makes no sense to try to take somebody else's strategy and think that you can utilize that and be successful, right? You could possibly, it's possible, but it's more likely because there's a lot of other things going on that, you may not be aware of, right? Psychology, again, probably one of the biggest factors in trading. Our psychology isn't the same, right? Market conditions isn't the same. I may wake up differently, at a different time than you. I may be analyzing the market a little slightly different than you, right? My risk tolerance may be a little different than yours. So there's a lot of factors that play into, having a successful strategy. And you have to be aware of that, which is why it's good to, test these things out. That's what I do. I watch a lot of different videos, right? And I just take and I try things out, that I see that looks interesting, that I feel like can, possibly fit into the trading process that's already making me somewhat successful, right? And most of that stuff don't even work. I'll tell you, I try a lot of different things out. Most of it don't work, right? And when I realize it don't work real quickly, right? I discard it. Boom, I'm done, right? But I do try things out again just to see if they work, for me. Again, so what that is developing your own individual trading strategy and process. It's nothing wrong with using, tips, tricks, strategies from other people, right? But you have to rely on your own instincts. Put together your own trading strategy, your own trading process. What works for you? The only way or the best way to do that is to try different things out and figure out what works best for you, right? Not what you see working for other people. That is the quickest way to get yourself messed up in this game, right? Is thinking that you're going to take someone else's strategy, someone else's process, and be successful. Is it possible? Sure it is, right? Highly unlikely though. It's highly unlikely that you're going to be successful using somebody else's strategy step by step, right? Probably not going to happen. You have to put in the work and you have to figure out what works best for you, right? But again, that comes with trying different things. Figure it out. All right. Again, happy trading. I hope and pray that this has been really helpful to you. And you get into these trades with more confidence now. You start testing, more things out and figuring this thing out for yourself. And start to take control of your own trading success. That's what this is all about. That's what I'm here to do, to guide you to that process and that realization that you got this. With all that being said, great trading to you.